Hey guys, this is Simon with Trade and Perform Coaching, doing the trade review for Friday. Let's see, we were on the 7th of August, and want to go through and highlight what how the trade played out. And so it was a little bit of a different day, right? Usually, when you're promoting a room and you're trying to help others out, you want to talk about the trades that worked well. I'm actually going to talk about a trade that did not work properly, but I was still successful in the trade. And this is the reason why. I followed my trading rules. What makes me a successful trader is that I am completely and dogmatically a slave to the process. I don't care what the market does. Market owes me nothing, and I want nothing from it other than money, right? If you ask me, obviously, we're in this to make money. Anyone's in business to make money. But the market owes me nothing. I really don't need it to give me anything. My process is what pays me, not the market. It's a psychological adjustment, right? But what it does is it makes me a slave to the market and not a slave to what's going on via price action. So let's jump right into it. Before I highlight the trade, I want to go through the checkoffs that we had in the morning. First of all, we had a gap down. First question on gap down is, do we have an open drive lower? Are we able to attain half gap? And are we able to attain gap fill? If we can't get gap fill, we know that we have a weak market. If we can't even get half gap, we know that we have an extremely weak market, right? Obviously, in the first half hour, what's the greatest danger? Open drive higher, open drive lower. What is that? Let's talk about that for a second. A gap down accompanied by an open drive lower, right? We get 3 bars down and the thing pretty much free falls down. This is a widowmaker, right? People try to buy into the first 15 minutes and they just get bone crushed, right? What's the hope? Is they're going to buy this gap down, and earlier in the year, buying this gap down resulted in very large profits, right? Let me tell you, all the guys that were buying these gap downs at the beginning of the year and killing it, they are now in the process of getting killed, because if they were patient and waited through the first couple of rips, they were getting rewarded with 15 and 20 point pushes up. What is the point of the room that I'm running and the coaching room and the one-on-one coaching? The point is to help traders, A, get from being the frustration of losing money consistently to getting consistent as a trader. What's the key to getting consistent as a trader? Dr. Brett Steenbarger highlights that. It's the boom-bust cycle. For beginning traders, it's the day-by-day boom-bust cycle. I have a great day, I give it back. Then I have a great week, I give it back. Then I have a great month, and I give it back, right? But once you mature as a trader, it starts to change. You go more by quarter boom-bust cycles, which are very mentally hard, right? It's frustrating to make money for 3 months. The next 3 months, you give it all back. You're like, what the hell's going on? But the worst ones are really the year-over-year boom-bust cycles, and then the killer, the 3-year boom-bust cycle. Can you imagine making money for 3 years in a row? Millions of dollars possibly, right? And then you turn around and over the next 2 years, 3 years, you give it all back. It has a devastating consequence, because at that point you've invested 6 years in your business, right? And you're confident, right? You made millions of dollars. You're doing great. How can it be that you gave the money back? And the answer is that the market is a constantly changing place. And to take a line from that new movie, The Martian, in the book, which is fantastic, by the way, if you haven't read it, the line that'll be famous is, this is space, it doesn't cooperate. Well, this is the market. It doesn't cooperate. Your plans do not matter to what the market's going on, and you can be guaranteed at some point everything will go FUBAR at some point. Okay, my job as a trader is to make sure my account doesn't go FUBAR, right? Market can go FUBAR. I can't go FUBAR, and my account can't go FUBAR. Well, how do I prevent that? A, I have stopgap measures in place to prevent me from getting hurt on both a daily, weekly, monthly basis. And number 2, I follow my trade plan. So in the room, for those of you that are in the room, you already know this, I have a proprietary swing indicator. And it lets me know when I'm about to have winning trades, right? Either swing long or swing short. But in order to trigger that, I first must have, for a long, I first must have a move down, and then it has to make some kind of move back to the upside in order to trigger a long, right? And the opposite is true of a short side trade. These trades tend to generate anywhere from 2 to 10 points or more in P&L for me per trade. I know that that's the potential of the trade every time. And key, right? There are 4 points of entry, right? So if I move down, I move back up, I get my trigger. This is entry number 1. The 50-60 retrace from the neckline or the swing low, as you may want to call it, right here, halfway back, that's entry number 2. This is the most aggressive entry. This is the second most aggressive entry. Then if there's a support, we'll pretend like this is support. If we come down, this is entry number 3. And then if there's a neckline, you'll forgive my drawing. No one's going to ever pay me for being an artist, that's for sure. But close back in, and then boom, push to the upside. This is the highest odds entry. Remember, and as FT71 likes to say, who's another one of the great teachers on the web, even if you have a 99% win rate on your trade setup, 99%, that means out of 1,000 trades, right, you are going to have 10 trades that are going to go against you and stop you. So you need some type of risk management, right? And then secondly, those 10 trades, the 1 out of 100, right, those 10 trades will be distributed randomly, which means you can do 1,000 trades, and mathematically at least, you can get those 10 in a row, right? And I don't have a 99% win rate. My win rate fluctuates between 70% and 80%, depending on the time of year and how the market's behaving, right? For most of my trades, some of my options trades have lower odds on them, but for most of my futures trades, that tends to be my win rate. I can tell you over the past 2 weeks, I believe, 3 weeks that I've traded, I was on vacation for one of those weeks, I've been hovering around 80%. Okay, so why is that important? I don't know that the trade's going to win, number 1. And number 2, I have to take proper risk management. Number 3, I have to follow my rules, because just having the setup is not sufficient. I have to have the discipline to both stay in the trade and work the trade. So moving on, I have half gap. This is half gap because our gap fill kept moving down. We had the potential of an open drive lower with this bar. Obviously that didn't happen, right? We were on alert in the first 5 minutes. No open drive lower. We had a gap down with a big negative tick on the NYSE. It came back in. This was half gap if you'll measure from the prior day's close to here. This is half gap. So I know after the first half hour that 3 things have happened. I've had a swing long trade trigger. I've had half gap fill but no gap fill, right? So I know the market's weak but not extremely weak, right? I know that the rotation size from the prior day's close to the swing low was 10 points, right? But intraday, which is the one that I'm really concerned about, I only have about 5 points of rotation. 5 points, right? And that's the one I'm really concerned about. So what the market's telling me at this point is, first of all, I usually don't take trades in the first half hour. Why? So I can observe without any pressure what the information the market's trying to communicate to me. And on those days when we have those massive rushes down or massive rushes up, I don't get killed, right? Key to surviving long term, don't get killed. If you're a caveman, what do you want to do? You don't want to get eaten by the dinosaur. Well, if you're a trader, you don't want to get eaten by the super fast computers that are throwing orders at the market so fast on those days where we have open drive higher and open drive lower that you get crushed. The problem with those days are, in your mind, you always think you can find a way to get those done. Reality is you're likely to be a victim on those days. Okay, so we know that we have, at this point on this bar right here, I had a swing long trigger, right? Remember, I have 4 points of entry, 1, 2, 3, 4. So I don't take entry number 1. Why? We're in the first half hour. I want to see if we get gap fill. I want to see if we're going to break to the downside. I want to see if it's going to be delayed open drive lower, right? Reason number 2, right now the market's kind of whippy and showing balance. It's not showing that it's ripping. So I know that I got entry 1. I know this is roughly halfway back. That's my 50-60. And then I know the zone below at this point. This zone's already been tested, right? So my first support point is this 2063. This is entry number 3 on this scale, right? And then entry number 4 would be a close back into this structure. So if you look, we never got a number 3, right? We're past 9 a.m. It's all right for me to trade now. We never get an entry number 3. And then we push down here, and there's no zone here. We push back up, and on this bar, see how the low of this bar was at 2071.25? This bar triggers an entry to the long side. Here's the problem. As soon as this bar closed, we literally got a buy program that pushed this market all the way to 2073.75. So what did I do? I said I'm going to take my entry at 2072.50. That's where I got filled. Could have done a little bit better actually, but that's where I ended up taking the trade. And from 2072.50, I was able to get one scale off, but I never got 2074.50 for my second scale. Okay, so have I followed? First question I want to know at this point is, have I followed my rules? Yes or no? Well, I did a couple things. First of all, my stop is 1 point behind here. So if I took the trade at 2072.50, my stop was roughly 2066.50. So that's 4.5, 6.5 points, right? Problem, right? Big problem. So I need to do something. I need to cut my trade size down if I'm going to take that entry number 4, because I do not want to take a 6.5 point loss. This falls in line with taking the stop that the market demands versus the stop I want to put in. The stop, what's the stop I want? 2 ticks, right? That's emotionally, I don't want to lose more than 2 ticks. I want to be perfect. But what have I learned over the long years, over 20 years of trading? That doesn't work. It gets me stopped. 4 ticks gets me stopped. 6 ticks gets me stopped. The proper stop there was 6.5 points. I have 2 choices. I can decide stops too big, not taking it, cut trade size. I can take quarter size, half size, or I can take it with options. In this particular case, I was looking at it. What do we have at this point? 6 down days in a row. Open gap sitting above. We're really showing balance on the tick, and I'm thinking I can get at least a 2080.50, maybe even a test of 2090, right? That's a nice P&L. It's a nice RR. Okay, cut my trade size in half. Half size, 6.5 points is equal to 3.25 on full size. I've had, at this point of the week, 100% win rate. I don't think I had any losing trades. I'm going to have to think through it. But going into Friday morning, I don't think I had any losing trades. I cut my trade size in half. I have my highest odds entry. I'm following my trade plan. I'm using the right stop, right? I'm doing everything correct at this point, right? I also know the trade can take anywhere from 15 minutes to 3 hours to complete, okay? So I take the trade, and then disappointment sets in almost immediately. Big bar down. But I don't know why the bar is going down. I'm not a genius. And maybe it's just taking a backside test here really quick, and we're going to still push up. We've already done that one time on the bar before. One thing I'm not going to do, I'm not going to move my stop. I want to leave the appropriate stop. Pushes down, I get stopped. What happens here is very important. Remember the 3 C's. Clarity, I know exactly what trade I want. Commitment, I'm going to take the trade at the right size with the right stop when the trade sets up, and I will take it properly. And the last one, composure. If I do not keep my composure, I cannot learn from what's going on, and I cannot continue to think on my feet, and I'm going to blow the shit out of my trading account. I don't want to do that. So I get stopped. What's going on? Okay, well, we've broken out of balance. Trap number 4 didn't work. Very rare. But then I also got to remember, I have not gotten a swing short set up on my indicator yet, right? Where's my next location? 2063.50. I did not take this trade. There's a reason why I didn't take this trade, and I want to go into it real quick. My lovely daughter was putting on a TED Talk at SMU University, and I wanted to see it. She'd gone to camp. She'd learned how to do her TED Talk. She'd worked hard on putting the presentation. And one of the big advantages of trading and running your own business and making good money is that you can do the most valuable things in life. And that is spend time with your family. As much as I love the market, obviously, I want to do the right thing. Here's the deal with trading, and Dr. Brett Steenbarger talks about this all the time in his books. Highly recommend that you read his books. Any of them. They're all masterworks, right? If you take a trade, once you take a trade and you're under pressure and conditions are not ideal, you can slip into a fight or flight process, and you can start making terrible decisions. Terrible decisions don't go for your trading decisions that you make in the market. Terrible decisions go for terrible family decisions, terrible life decisions too. I know that I told my daughter I'd pick her up around 11. We'd go to lunch. I'd take her up to SMU so that she'd have time to get prepared for her TED Talk, and I could sit there and watch it, right? It's 10:30. I know that I got to leave at 11. I know my trade can take 15 minutes to 3 hours to work out, and I want to give my daughter 100% focus. If I take this trade, it's very likely that I find a reason to either be late, find a reason not to go, all kinds of things. Is that terrible? Yeah, but remember, when you're trading, you are not thinking with your frontal lobe, right? You're not making your decisions here. You're in fight or flight, right? In fight or flight, you make stupid decisions. Great decisions if the house is on fire, right? Get the fuck out. But poor decisions if you are in the, if you are not in a fire, right? And my daughter is more important than the trades. I've made that family decision a long time ago. So I can't take this trade. I don't have enough time or mental capacity to make this work. But going through here, if you'll look, and I'm going to wrap things up, here's the new structure. This is the new number 4 location. We'll call it number 5. All right, let's erase out of here. And you're going to see, right, below, push below and close below structure that's right here. Forgive my artistry is less than desirable. Close back in. This is the new trade number 4. It's still in effect. From this entry, which is roughly 2065 and 3/4, right? It obviously pushes back down, gives a 50-60. But assuming you took the 2065 and 3/4, which is what I would have done if I could have done it, right? I get a push to 2066 and 3/4 for a scale, and then I get 2067 and 3/4. I don't get scale number 3, 2068. So in all likelihood, right, I would have gotten stopped out on this move, maybe right here. Let's see if that was 1 point behind. Let's go look really quick. Hold on a second here. This low is roughly 62.75. This low is, oh, you know what? Lo and behold, we would have survived. 2062 and a quarter was the low. 2062.75 was the prior low. We would have survived that move. And this is the reason why that's important. And this is the reason why it can take so much time. Okay, so let's bring this up. From the time we get the next trap in, right? Look how much time it takes. All the way through New York lunch. Push below. Oh, you know what? I stand corrected. But it still went to, it was still 2062.75. That's right. And it went back to 2062. That was correct. We stayed within our 1 point stop behind the low, right? And then look at this. Here comes your, here's your third scale right here, right? And then you also ended up with 2069.75, and it finally pushed from your original entry right here, like 2065 and 3/4, all the way up to 2074, almost your 10 points a push above. So to go through that again, right? The zones. So let's go through both methodologies of entry. First of all, the zones. First time into the zone, we got a responsive move for 2 points. That's the most basic trade I have. 2 points, 2 points. Check. It worked. That's great. Entry number 4 failed, rarely, but it happens, right? Took a loss here. Could not take this trade, but did the trade work, right? It's important to know that even if I don't take the trade, that I'm making the correct trading decision. I want to be able to have confidence. If I take the trade here, this results in a 10-point move by the end of the day to the upside. I get my risk off. I didn't sustain a second stop, and I more than made up for the loss, the 3 points that I took on the half size over there to the left. Okay, so this is Simon. Follow your trade plan. Have your trade plan written. Meditate. Slow your mind down so you can see what's going on. And most importantly, the 3 C's: clarity, commitment, right? And then lastly, and probably the most important thing you have to do while you're trading, maintain your composure, guys. Maintain your composure. There's nothing else that's more important. Anyways, this is Simon. I'm with Trade and Perform Coaching. I hope this was helpful. I hope everyone's having a wonderful weekend. I'm looking forward to next week. And obviously, we trade the market to make money. We trade the market to get rich. Everyone wants to get rich. But you don't want to be a slave to the market. If you're going to choose your slavery, and we have to be a slave to something, be a slave to your methodology. Be a slave to the process. Don't be a slave to the price action. Don't be a slave to your emotions. Everyone can make money in the market. You may not make billions, right? It's possible, but you probably won't make billions. But you can make a lot of money if you simply have trading discipline, you understand your setup, and you stay consistent day in, day out with your execution, and you have the emotional ability to understand where your edge is. Anyways, my name is Simon. Talk to you later, guys.